Hello there, you're watching Bizworld. I'm Anita. The Malaysia Digital Economy Corporation, or MDEC, is expecting 1 billion ringgit in investment opportunities by 2025 in the digital economy. According to the CEO of MDEC, Mahathir Aziz, this will be generated via the Malaysia Digital Catalytic Programs, or Pemangkin, with 192 million ringgit allocated by the government.
We have roughly about 45 million right there in the middle from the total investment that will be used to enhance various technology enablers such as blockchain, automation, AI and more. A further 4.9 million ringgit from the total investment will be distributed through our digital grants.
The sectors that MDEC has identified are tourism, agriculture, cities, content, finance, trade, services, health and the Islamic economy. The initiatives for each sector will be announced in phases from May, including 3 new digital grants. Meanwhile, the government aims for the digital economy to contribute 25.5% to the country's GDP and create over 500,000 jobs by 2025.
In just 10 years, the positive
Foreign selling of local stocks on Bursa Malaysia has seen a fluctuating trend as foreign investors net sold for 3 out of the 5 trading days. The net buying of 112.2 million ringgit on Thursday, however, managed to offset the net selling for the remaining days of the week. According to MIDF research, last week marked the 3rd consecutive week of net foreign inflows, which saw an increase to 69.5 million ringgit. Institutional investors remained net buyers for the week, with a total of 3.6 million ringgit. Year-to-date, institutional investors have been net buyers for 11 out of 15 weeks, with a cumulative total of 1.82 billion ringgit, whereas local retailers continued their trend of net selling for the 3rd consecutive week, amounting to 73.1 million ringgit. The greenback will remain the dominant currency of the world, albeit some discernible dilution in status. According to Maybank Investment Bank, the US dollar's share of the world's external reserves had declined from its peak of 72.7% in the second quarter of 2001 to 58.4% last year. It added that total foreign holdings of marketable US treasuries have fallen to around 1/3 of the total outstanding in the current decade versus the high of 56.5% in 2008. Whereas the value of foreign central banks' holdings of US Treasury holdings have stagnated in the last decade at around $4 trillion. The firm expects the greenback to experience gradual and longer-term rebalancing of the currency mix in global external reserves. Present ratios of key currencies in the International Monetary Fund's IMF special drawing rights for the US dollar, the euro and Chinese yuan shares are 43.4%, 29.3% and 12.3% respectively. Recent developments suggest coalition among the large emerging economies, spearheaded by China and Russia, to explore ways to reduce dependence on the US dollar. This includes the prospect of the Petro-Yuan initiative in energy commodity trade. The general insurance industry has recorded an increase in gross direct premiums of 10% to 19.4 billion ringgit last year. Underwriting profit, however, had contracted by 23% to 1.56 billion ringgit, mainly due to losses in the motor, medical and health insurance businesses. General Insurance Association of Malaysia, PIAM, said motor maintained its position as the largest business with 46% share of the total premium. Subsequently, motor daily claims represented 72% of total insurance payout. Meanwhile, premiums for fire rose 6% to over 3 billion ringgit, with underwriting margins improving to almost 40%. Personal accidents also saw a significant 43% growth in premium, largely due to the Pelindungan Tenang voucher program. Whereas medical and health insurance also saw a 1% rise in premium to over 970 million ringgit. However, the segment's underwriting margins more than halved to 5% last year from 12.1% in 2021 due to higher claims. That's all the time we have for Bizworld today. I'm Anita. Thank you for watching and stay tuned to TV Tiga.